Let's get started. My name is Allison, and I'm a member of the Customer Success team here at YCharts. Hosting our webinar today is Connor Kitko of the marketing team and Rushi Shah, a member of our product team. Today, we're looking back at the 2010s using 10 charts that we created. We posted these on our YCharts blog, and a lot of you reached out with questions on how you could create something similar for your clients. So we're going to cover each of these charts, discuss their importance, and teach you all how to take what you're seeing in the headlines and turn it into great opportunities to engage and educate your clients. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, as always, a recording of the webinar will be made available on YCharts and sent to all attendees. Now I'm going to pass it over to Connor and Rushi to get us started.
Thank you, Allison. As mentioned, I'm Connor Kitko from the YCharts marketing team.
And I'm Rushi Shah, a product manager here at YCharts.
We'll cover 10 charts today, each of which tells a different story about the US or global economy, equities markets, and beyond. We found that a lot of YCharts users love the ability to educate their clients and demonstrate investing or planning concepts through visuals. We love to hear that because it's exactly what we made YCharts to do: help advisors add value to their clients' lives. Let's jump right into these charts and follow along because we'll be covering some YCharts functionalities that can make your client and prospect communications next level. You ready, Rushi?
Let's do it.
All right. So this first chart is titled US Job Openings Eclipses Job Seekers. And what you can see here, the purple series in the top section of the chart is total US job openings. The orange series is US unemployed persons, and the blue series is unemployed persons who are also job seekers. Now, a quick caveat is that you might be used to talking about unemployment as a rate, but these are raw numbers. In about mid-2017, U.S. job openings eclipsed U.S. job seekers, which you can see at the point on the chart where the blue and purple series cross. This is a sign that there's still room for the U.S. workforce to continue growing, even though unemployment is at that record low 3.5%. Looking at the bottom half of this chart is a ratio of U.S. job seekers to U.S. job openings. So that would be the blue series divided by the purple series. And it shows that in December 2011, there were about 3.3 job seekers for every job opening. Compare that to the end of 2019 when our decade came to a close, there's only 0.7 job seekers for every job opening. Now, this is a pretty insightful chart about our job market, and I want to show you some functionality in YCharts about creating these ratios. So here we are in the Fundamental Charts tool, and you can see I'm starting with the top half of that chart. We have US job openings in purple increasing over time, and then decreasing are the unemployed persons and unemployed job seekers. I want the ratio of that job seekers to US job openings, and basically what this is going to tell us is how many candidates are there for each open position in the US economy. At the bottom of this left panel, you can see this ratios, spreads, and correlations button. I'll click create, and this window opens up. We're going to be working on a ratio. However, you can imagine use cases for spreads and correlations. Maybe you're looking at Amazon.com stock compared to e-commerce sales, and you want to see how those two move together or diverge over time. But here we'll start with US unemployed job seekers, and I'm going to make a ratio between that and US job openings. Total non-farm is the series I want. And this is great data that we source, YCharts sources from the Federal Reserve and the Bureau of Labor Statistics and a lot of other very reputable sources that we collect to put into YCharts and give you guys the best information. Once I click create, you can see the series across the bottom, and this is that ratio of the blue series divided by the purple. Right around 2017 is where that ratio hits 1, and from that point on, there have been less candidates than there are job openings. Really interesting stuff about how the job market has changed over the last 10 years. Turning to the global economy, the next chart is one I think that reveals a lot when we're considering or talking about trade balances.
Yeah, definitely, Connor. So let's take a look at this chart where you're looking at the US trade balance versus a few other countries that from around the world. So you have in the top portion Canada, Mexico, and Japan, and towards the bottom you're seeing China. So this might be interesting for a couple of reasons. Number one, you're seeing that the trade balance is very similar with those other countries other than China. But towards the bottom, you're seeing that very low value for China and how it's pretty much separated from those other countries. I'm going to jump into YCharts just to show how we did a couple of these features. So when I go into this chart, you can see that this has some annotations on it, and it shows how thin or how less volatile these three countries are towards the top. What I can do on the fundamental charting tool is click this annotate tab. Once I click into the China metric, I can go ahead and add a min and max line to the chart. Once I click add, it's going to add that onto the chart, and it tells a little bit more of a story with what's going on with the China values. You can see how much more volatile it's been over the last 10 years compared to those other countries. So now we've taken a look at some of the country's economic well-being, but what did the 2010s tell us about the consumer's well-being?
Yeah, so Rushi, this chart compares student loan, auto loan, mortgage, and credit card debt growth from the decade 2010 to 2019, and then compares that against the previous decade, so the 2000 to 2009 decade. Now, the darker series on this chart is the growth of these debt types in the United States from 2010 to 19, and then the lighter series on the chart represent that decade prior. Every one of these four debt types of consumer debt has seen slowed growth in this decade. Most notably, perhaps, is how mortgage debt grew 162% from 2000 to 2009, but only 6.7% from 2010 to 2019, those being the green series that you're seeing on the chart. This is pretty consistent with what you might have been hearing about a lot of younger people in particular preferring to rent their homes or apartments instead of buying them outright. A quick caveat about this chart is that we actually pulled some of this great YCharts data into Excel to create this chart, and I know Rushi is going to be sharing more about our Excel add-in later. But Rushi, as someone with a car, credit cards, a mortgage, and student loans, how does this chart make you feel?
Well, not great, Connor, to be honest, but I think what's really important is, especially for you advisors out there, it's one thing talking about investments with your clients, but I think another really big point is personal finance. I know that's helped me a lot coming out of college and being able to manage my income and expenses, so that's really helped me, to be honest.
Yeah, that's a good point. Adding value beyond the portfolio or the financial plan necessarily. This next chart, Rushi, is another that you can't necessarily find on YCharts, the website, but you can make it using YCharts data.
Yeah, definitely, Connor. So let's take a look at this one where we got kind of creative with our Excel add-in and our data to put this into a really nice and friendly view. So I'm just going to jump right into Excel. Now you can see that this table looks a lot more like Excel than the one that we were just looking at, but this is where we started to put that data together. We simply use our YCharts formulas to pull in that total decade return for each of these stocks and ETFs. So I left this portion blank to show you how you can do that. You can use the YCharts tab once you download the Excel add-in, which by the way is a feature for our professional users. And you can use these buttons here towards the top. So when I click on Ulta Beauty, for example, and I want to pull in that decade return, I can click on that YCP button and that formula builder is going to come up. Now from here, I can go ahead and start putting those inputs in for this formula. So for ticker, I'm going to click on the cell with Alta. For calc, I have the metric code right here, which you can find on YCharts. And lastly, the date, which 12/31/2019 is the last date of the decade. Once I hit OK, you'll see how quickly that data is populated into your table. Now, we have clients that build very large Excel models with our Excel add-in, but you can even do simple things like this and just pull in that data to make a nice view of something that you want to put into slides or something you want to share with people. From here, we kind of turn this data over to our great marketing team and Connor, and they do such a good job of making this thing look a lot better and presentation friendly. So we took this chart and went and made it look a lot like what you're looking at here, where we were able to add in some colors and make it YCharts branding. That's something that you can definitely do with your team and build the chart out in Excel and then visually change it to make it look better. Some interesting things on this table, just to point out, I thought it was really interesting that consumer discretionary was the best performing sector of the last decade. And the top stock in there was Ulta Beauty. Now, Connor, I use Amazon Prime a lot, so I'm surprised it got second there. Ulta Beauty, not so much for obvious reasons, so this one caught me by surprise. And I guess it's because I think of retail stocks more from a consumer perspective, and I just think about the places that I like to shop.
Yeah, I definitely agree. I use Amazon almost every day, it feels like. Certainly a larger company than Ulta by customers and footprint and most other metrics, but you think about, Kylie Jenner's makeup line is what got her on the cover of Forbes magazine. It's not surprising that Ulta Beauty, a makeup company, is, making great strides as far as a decade return is concerned.
Yeah, definitely. That brings up a really good point. And just to move along with some other things that we've noticed on this table that are interesting, everyone's talking about the market and how great it's performed over the last decade. One sector that kind of missed the boat would be energy. You could see that the XLE ETF was pretty much flat over the whole decade, which I thought was really interesting.
Yeah, and I'll add too, this Rushi is by and far the Excel wizard around the YCharts office, but you just saw how easy to use this is and create stunning next level graphics. If you currently don't have access to the YCharts Excel add-in and you want to get started, you should reach out to your support contact and they can help in getting you access to this powerful tool.
Definitely. So now we've seen how each sector and the stocks within those sectors have performed. Connor, what does the next chart say about the S&P 500 as a whole?
Yeah, so this chart plots the S&P 500 total return for each year in the 2010s decade, In those 10 calendar years, the S&P 500 finished lower only one time when it lost about 4.4% in 2018. You can see that minus 4.38% on the right side of this chart. There were 3 years out of 10 when the S&P had gains in excess of 20%. That was 2013, 17, and this past year, 2019. And then there were 7 years that we were above that, historical average that everyone likes to quote of about 10% in 2012, 13, 14, 16, 17, and 19. The market returned greater than 10%. If we look to the left hand of this chart, in the point where we're in January, there were only 4 years when the S&P went lower in the first month of the year, but it went on to gain more than 10% in 3 of those 4 years. Now, this is a really interesting and positive chart. It shows how positive the economy has been over the past decade. Rushi, we often hear a lot of negative headlines telling us that the sky is falling and that you should move to cash for whatever reason. What was your favorite moment of the market over the last decade when it looked like things were really going sour?
Yeah, I think the scariest one that I recall would be Brexit. I remember the night before that hit the markets, they had the vote, and then I used to be an equities trader back then, so I walked in the morning and futures were down crazy and everyone was freaking out, but seems like the market's turned out okay after that.
Is that why you're no longer an equities trader?
I found better opportunities at YCharts, I guess.
Oh, gotcha. Okay. All right. This next chart that we'll talk about shifts from stock performance over to another economic indicator, interest rates.
Yeah, definitely. So this chart's really interesting for a few reasons. To start off, you're looking at many of the long-term interest rates around the world. So there's countries like the US, Germany, Japan, UK, France, and Canada. You could see towards the beginning of the decade, a lot of the interest rates were very close to each other, and they diverge over time. And you're looking at now, it's this new phenomenon of negative interest rates that's been really interesting. It was a big topic in 2016, and it's something that has kind of stayed in our economy, which is really interesting. Something that also is really important to note here is the fiscal policy around some of these countries. And I know here in the US, a big portion of it is what the Federal Reserve is doing. And it's funny, in the FinTwit community, I've seen more jokes about Powell and Janet Yellen than serious comments. But I think their jobs are extremely important, and what they do impacts these rates in such a large way.
Yeah, Rushi, it's funny to see, at the previous half of the decade, Janet Yellen regarded as kind of a dovish chair, and then Jerome Powell is considered to be more hawkish. But regardless of the public perception of whoever is that chair of the Fed, there's a lot of power behind that position. And I think that's why you see so many people in the news and on Twitter, whether it's joking or serious, paying such close attention.
Yeah, definitely. And I guess we'll move on to our next chart, which some of you probably either love or hate, and that's Bitcoin.
That's right, Rush. A lot of strong feelings about Bitcoin. And cryptocurrencies came onto the scene. You'll notice that this chart is not a full decade. We're starting in about 2015. And that's when cryptocurrencies came onto the scene, when a lot of us heard that word for the first time. And it's forever changed the regulatory landscape of financial markets. The jury is actually still out whether or not these are even securities. This chart shows Bitcoin, Ethereum, and Ripple, which by market cap are the three largest cryptocurrencies out there. And we call this the crypto mountain because it looks like a mountain, first of all. But it shows this huge spike and then fall from grace for all of these cryptocurrencies. That said, if you look to the right of the chart, you can see that all of these cryptocurrencies are up anywhere from 2,000 to 4,000% since just 2015. So while they had their heyday back in the second half of 2017 and the first half of 2018, if you were cognizant enough to buy Bitcoin back in 2015, it's looking pretty good right now. Rushi, Bitcoin is currently right around $9,000 per coin. So if I gave you the option of either one Bitcoin or $9,000 cash, which would you take?
Definitely the $9,000 cash. I think, first of all, cash is king, but also
Amen.
I think a really big thing is that, I don't like investing in things that I don't fully understand. And to be honest, cryptos is something that I don't understand. And so something that a lot of you advisors are probably talking to your clients about, and it's a big talking point, but something to be aware of.
Yeah. So while cryptocurrencies were a huge talking point of the last decade, Rushi, another one was volatility, or maybe the lack thereof.
Yeah, I like this table a lot because, again, we used the Excel add-in and our data functionality to build this out, but we're basically looking at different decades and what the VIX, or the volatility index, has done over that time frame. The volatility index is simply a measurement of how volatile the markets are. So you'll notice that when the markets are moving a lot, or particularly moving in the negative direction, the volatility index will actually increase. So if you want calmer markets, you would want a VIX that's lower. Just looking at this decade table, you could see that in the 2010s, the average VIX value was 16.9, which is lower than the 1990s and the 2000s. So you saw calmer markets, which was probably because we didn't see a recessionary period over this time frame as well. It's crazy to think that this was the same decade, but our next chart covers Greece's economic crisis back around 2013.
Yeah, Rushi, you just said it, but it's crazy to think that this was in such recent memory when it feels like so long ago. But back around 2012, 2013, there was this Eurozone crisis going on. Notable event in the early portion of the decade. And during the crisis, Greece's long-term interest rate, which would be their 10-year rate, reached as high as 29.24%. And you can see even all of these other Eurozone countries that were really affected by this economic crisis, no one had it as bad as Greece. And their unemployment rate, we're talking about in the United States at the current time, 3%, 4% unemployment. It was as high as 30% in Greece at the end of 2013. This chart tells a lot about Greece's kind of rising from the ashes as well. Look at their long-term interest rate is back with the pack in the sub 1.5% area, and their unemployment rate is still not good, but sub 17%, clearly an improvement, cut it in half from 2013. Moving on, this last chart of the decade is one that I think is especially valuable, and it kind of calls back on something Rushi said earlier with our sector returns.
Yeah, definitely. So here's the final product, and we'll get to that. I think we should jump right into YCharts to build this out. So I'm going to start from scratch, and I'm going to go ahead and add in metrics to build out this fundamental chart. Now, if you're not fully familiar with our fundamental chart, I think one of the biggest value adds is that you can add securities on the chart along with economic indicators. So you can type in the US retail gas price using our predictive search. But you can also type in securities as well. So I'm going to go ahead and add in the S&P 500 ETF SPY and also the energy ETF XLE. Then I'm going to change the date range so that we're looking at the last decade. You can click on this date range button here and click on full year so that I can easily just go from 2010 to 2019. All right, so now I've got my chart here. Now this is pretty interesting, but I could do a few more things to tell more of a story. So the first thing I'm going to do is normalize the chart. So we're looking at percentage change rather than price on those two ETFs. Now, while I want that to show on the ETFs, I don't want it to show on the retail gas price. So I'm going to click on annotate. I'm going to click on the US retail gas price. And I'm going to go ahead and force original format. So now I'm looking at just the retail gas price, not its percentage change. I'm also going to add a min, max, and average line on that just to view how it's done over the decade. Lastly, I want to separate these lines. So what I'm going to do is click on panel per financial metric. So what that's going to do is it's going to bring up the retail gas price towards the top, and it'll give me more of an apples to apples comparison at the bottom with the SPY ETF and the XLE. So you can see a few interesting things here. Now that we have our presentation view and we're ready to export this or put it into a deck, you can click on this presentation view button here. You can add a title, add notes. Also, we give you the functionality of adding your logo on the chart too. If that's something you would like to do, definitely reach out to your support contact and they can help you with that. But I want to focus on the content as well of this chart. So what's really interesting to me is, well, first off, retail gas prices back in 2010 are pretty much where they're at now, right around 265. Also, you're looking at the high and low over the decade. We reached as high as $4 a gallon, but we also reached as low as $1.83. And like we mentioned before, the XLE ETF has been pretty much flat throughout the decade, while the S&P 500 grew over 188%. So was kind of a stagnant sector as a whole. I don't know, lately when I think of gas prices personally, I think of Tesla because they've been in the news a lot and the stock price has soared. Maybe Elon Musk has something going on over there leading to the demand of gas not really increasing.
Yeah, it's kind of an interesting like seesaw effect that's going on right now. We have a lot of companies like Tesla and countries as well putting money into, renewable sources of energy that would have a downward effect on gas prices. But then we also have countries like the United States, increasing their oil exploration and extraction, which I guess also has kind of a downward price effect as there's, some more supply in the market. But to your point, Rishi, 5% over a decade for the energy sector, it's going to be interesting to see what happens, in the next decade to come.
Definitely. And that wraps up our charts of the decade. We hope you enjoyed us running through each of these with you. And you not only learned about the specific trends that we noticed over the last decade, but also learned a bit about navigating through YCharts and using the tool. It will be interesting to see what trends define the 20s, but you know that our YCharts team here will be on top of them and will provide more content. I'll now pass it back over to Allison to wrap things up.
Thank you, Rushi, and thank you, Connor, for showing us a behind-the-scenes look at charts of the decade and how we can turn trends we see in the market to client-friendly visuals. For more content ideas and visualizations, please visit us at the YCharts blog at get.ycharts.com/blog. I do want to reiterate that a recording of this webinar will be made available on the Support Topics section of our site in case you need to review anything we went over or to share it with your colleagues. For any questions that you might have submitted during the presentation, your YCharts contact will be reaching out soon with the information you're looking for. Thank you all for attending today's webinar. We always appreciate any feedback you may have. If you have any questions regarding anything covered today, please feel free to reach out to your YCharts contact.